Good morning. It's Market Day Report. So glad you're with us this morning. All right, let's jump into the markets, and we'll start with overnight trade action in corn in the red, as the March contract was just under 501, down a penny and a quarter, penny lower on the new crop at 476.5. Hey, speaking of the old crop, look at the old crop contracts on beans in the overnight session. We did see 1070 on the July, penny and a half lower after hitting 1075 3/4. So kind of interesting when you see that 1075 for a high out in the July, but the contracts before it and after it are all lower. Maybe Brian Hoops can help us understand that in a moment. Soy meal contracts in the overnight session lower, and soy oil moving higher in the session yesterday and continuing that trend in overnight. Okay, now new crop contracts for wheat. That's July for Chicago. Nickel lower, 625. For hard red, July is 4 lower, 645 3/4. And December, Minneapolis, 692. Half penny lower. Finally, cotton futures, New York, December 69.55, down 32. Okay, I kind of teased it. President Midwest Market Solutions is Brian Hoops. Okay, Brian, help us kind of understand there. If we were to look at that bean market, why would we see something kind of in the middle, but still old crop, kind of rallying around and above the other contracts?
Yeah, it's a little hard to understand for this time of year. You know, you have a situation where the old crop contracts really have every reason in the world to fall right in here. We have a lack of demand for U.S. products. Demand is starting to slow. We've even seen some cancellations on our export sales reports on a weekly basis. But yet, soybeans are holding in there. Good rains, good growing conditions, record crop being harvested, record yields being harvested out of northern Brazil, and yet soybeans really cannot break. And the best explanation I think I can give is the fact that the funds have bought back all their shorts in corn and have gone to an extreme net long position. They are in the process of buying all their wheat contracts back, as the technical trend has changed in January to an uptrending market. And even though we don't have great fundamentals for the wheat market, we're pushing higher because of the fund short covering. And then you look at the soybeans, they're already out of their short positions, slightly net long. The technical trend remains higher, but yet we're having a tough time pushing a lot higher. But it's enough of a strength or enough higher market from a technical standpoint that we haven't really been able to push lower. Now, if that trend starts to change, and then we're getting really close to doing that, maybe a break or a close below 1030 in the March contract would suggest that technical trend is starting to change. Then I think those funds start to reevaluate their positions and can start to consider that the trend has turned back to the downside. They'll start rebuilding shorts, and then we may see a lot of pressure coming in these markets. Unfortunately, it may not occur until after Friday's option expiration, when the March grain options go off the board. That may be kind of the trigger for when that happens, or even when we get closer to first notice day next week.
Okay, so you mentioned that on Friday. We also get some reports from USDA. We get a export sales report. We'll get a milk production report and another report that we'll talk about in just a moment. Hang on, we'll come back and talk livestock futures with Brian Hoops. Market Day Report continues in a moment. So we'll be watching cash cattle this week, and already we know that we lost some ground last week. This is an interesting chart. We're looking at the April 25 live cattle from the past month, and you can kind of see how we've fallen off here for April live cattle since making some of those highs back in late January. What about feeders? Well, when you look at what's happened in feeders, we're trying to rebuild a bit, but still well off of our highs. And then over to April hogs, and well, after dropping, the bottom dropping off in early February, we're starting to build that back. Markets in the livestock sector will open here within the next 10 minutes. Brian Hoops is president, Midwest Market Solutions. All right, Brian, what will you be watching with a cattle on feed report set to come out on Friday?
Yeah, right. That comes out Friday afternoon, 2 o'clock Central Time. Trade estimates, according to Bloomberg, are looking for just slightly on feed supply, slightly smaller, at 99.2% of last year. We know last year's numbers were very tight. And we are compensating some of that by feeding these animals to heavier weights. We're much, much heavier than we were a year ago at this time. And a year ago, we were much heavier than we were the previous year. So we're compensating from that. We're also slowing our kill speeds down considerably. We're well under last year's slaughter, and we're going to continue to do that until these boxes start to improve and we can restore some of these packer margins. So we don't need as many cattle right now because the demand is not as strong as a year ago level. So it hurts our cash markets. Cash is called steady to lower this week, despite the fact that we might have a tighter on-feed numbers in Friday's report. Placements do look a little bit larger than a year ago, about 102.7% compared to last year, so 2.5% larger than a year ago. Marketing should be a little bit better as well. The real problem here is for this market is that front-end supplies are tight, but yet the cash markets are not responding to it because we don't have strong enough demand to lift these boxes. And that's kind of the bottom line, is we've been fearful for a long time that we reach a saturation point where maybe the American consumer backs off. We seem to be in that period right now. We get into the summer grilling season around the corner. That should improve. We should take another run back up near some of those old highs, but we really have to cure some of our ailments right now, including poor packer margins and these negative cutouts.
All right, Brian, thanks for the insight. We'll see you back here tomorrow. Brian Hoops, Midwest Market Solutions. Tammy?